Welcome back to Alpha Recap, your quick hit on the market close. Today we dug into a mixed session where rotation, policy headlines, and corporate news steered the tape. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to be here. We recorded this after the close, so everything we talk about happened on the day. No live trading talk, just what finished. Let's jump in.
Quick snapshot first. The S&P finished down about 0.2%. The tech-heavy Nasdaq finished essentially flat, and the small-cap index finished down about 0.1%.
Right. Those numbers told the story. Not a broad risk on or off day, but selective moves and rotation. Money left the pure mega-cap sprint and flowed into cyclicals and policy-sensitive pockets.
So what really stands out here is that it felt like the market was digesting information rather than sprinting somewhere. Tech held its ground overall, but materials, mining, utilities, and real estate picked up the slack.
Exactly. And small caps couldn't quite keep pace. Breadth was uneven, which matters for anyone watching participation. Let's break down the big themes. First, policy momentum in cannabis and psychedelics. Investors bought into regulatory shifts, and that lit up a few names.
Honestly, I was a bit surprised by this one. Cannabis and psychedelics moving the tape? That's not your classic macro story.
But it mattered. Those were idiosyncratic flows, concentrated, not market-leading, yet notable because they brought fresh activity into a quiet corner of health-adjacent stocks.
Right. And the other thing is materials and mining. Deal chatter and policy tailwinds pushed miners higher. Folks rotated out of passive tech bets into commodity-exposed names.
Yeah, that CapEx and M&A narrative had legs. When investors see potential for commodity demand to firm, mining comes back into focus.
Utilities and real estate also found buyers. Talks of grid upgrades, storage investment and fresh deals supported those areas. They acted almost like defensive cyclicals as rate volatility eased.
Which is a good point to unpack. When we say rate sensitive, we mean sectors whose valuations react a lot to interest rate moves. If yield swings calm down, these names can look more attractive because financing costs feel less risky. Communications and media were mixed. Some names slipped on AI monetization worries. Others rallied if they provide AI infrastructure or content distribution. So the group was pretty split.
Which gets to the bigger picture. AI remains structurally positive, but near term there's a lot of competition and policy noise. So you get dispersion instead of a clean sector swing.
Exactly. Let's do a quick sector tour. Materials and mining outperformed on optimism about commodity dynamics and deal activity. Utilities benefited from grid and storage headlines. Real estate gained on stronger starts and deal flow. Industrials saw CapEx narratives. Communications and media were split. Consumer was mixed. Energy balanced supply chatter with renewables momentum. And then, of course, cannabis and psychedelics spiked on policy talk.
That's a useful rundown, and the takeaway is thematic. Traders were picking winners by theme rather than buying the whole market.
Yeah. Now, a little macro context. There weren't any major economic prints that dominated headlines. The Fed stayed in a data-dependent posture in how traders priced policy, so nothing forced a dramatic re-rate.
So the policy outlook stayed broadly unchanged, meaning the Fed probably isn't going to pivot without clear, persistent disinflation. That keeps the backdrop neutral and encourages active security selection.
Put simply, until inflation readings and employment prints give a clearer signal, rate-sensitive sectors will be reactive to headlines rather than a single macro catalyst. Let's move to notable individual movers. Meat and potatoes for stock pickers.
Tesla finished the day up after reports of battery supply got a boost. The strength fed into battery names and ancillary suppliers, so it wasn't just a standalone move.
Oracle was a headline name. Its earnings and its ongoing AI push were front and center. Market participants were parsing whether Oracle could turn AI work into durable, higher-margin revenue for its enterprise base.
Poet grabbed attention after demos at the optical conference, showing hybrid laser and high-powered light sources for AI compute. That lifted several niche hardware and optical component names.
And on the industrial side, Rotork in the UK reported resilient non-GAAP earnings and revenue that pointed to steady industrial demand. Henkel in Europe trimmed gains intraday, which shows how earnings can produce back-and-forth moves.
Crypto remains choppy. Adoption headlines versus regulatory and liquidity noise. So crypto-focused stocks and ETFs were mixed, not a monolithic move.
Right. Also, smaller filings and 8K headlines from companies like TransUnion and KVH produced individual stock reactions, but they didn't coalesce into a single market theme.
Breadth was uneven. With the Nasdaq flat and the S&P slightly down, leadership is still concentrated in large-cap tech and AI infrastructure names, while small caps lagged.
That's the key technical note. IWM's slight decline highlighted continued softness in small caps and a lack of participation behind headline indices. Traders should watch whether rotation into cyclicals becomes durable.
Short reactions. Right.
Wow, interesting.
Okay, looking ahead. What to watch tomorrow? Earnings follow-through from Oracle and similar enterprise names will be passed for evidence of AI monetization. Tech supply chain signals like orders for compute hardware could shift leadership back to tech if they accelerate.
Policy headlines are also a catalyst. If cannabis or psychedelics see more regulatory movement, those sectors could continue to show outsized moves. And macro prints on inflation or jobs will, as always, matter for rate-sensitive sectors.
Materials and industrials will be watched too, whether the M&A chatter and capex narratives create durable flows or just one-day reactions.
So what did we learn? Bottom line, it was a neutral but watchful session. The S&P was down about 0.2%, the Nasdaq was essentially flat, and the small cap index was down about 0.1%. Markets closed with selective strength rather than a broad conviction.
And for investors, that translates into 3 practical takeaways. 1. Focus on themes validated by corporate behavior: AI infrastructure, grid modernization, industrial capex. 2. Watch policy-driven pockets for idiosyncratic opportunities. And 3. Diversify and pick securities actively rather than assuming the index will carry everything.
Yeah, and don't forget the macro caveat. Unless we get a decisive macro surprise, the Fed is likely to remain data-dependent, which keeps the market in this theme-by-theme mode.
All right, final quick hits. Expect tomorrow's tape to follow corporate catalysts and policy headlines. A big macro surprise would be required to reset the broader risk posture.
If you want deeper notes on any of the names or sectors we mentioned, head to stockalpha.ai and ask us directly.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.